What's up, ladies and gentlemen? It's your man's the Trucking Trader, and we are back with another video. Let's get straight into this video today, you guys. Before we get into it though, if you guys would be so kind as to leave a like, subscribe to the channel, or maybe leave a comment towards the end of this video, I would greatly appreciate that, as it really do helps the channel get into the algorithm and it helps the channel grow as well. So today I'm going to be talking about premium versus discount, and why is that so important, and how to find the correct premium and discount zones. All right, so premium and discount is essentially, where is the market oversold, where is the market overbought, right? Think about it like this: if you're somebody that owns a business and you're selling something, you always want to sell it at a premium, right? You always want to sell it for the highest possible price that you can get it at. And if you're a buyer, right, if you're buying the market, you always want to buy it at a discounted price. The biggest discount that you can get is what you always want, right? So that's essentially what premium versus discount is. Now, I'm going to show you guys how to find premium versus discount zones, all right? So let's dive right into the bigger time frames, because it's always important. As I continue to give out information, I want y'all to know that, you have to stick to the same order of doing things. And me, I like, I like to pretty much start from the top and go down. So I like to go from the bigger time frames to the lower time frames. Okay, so I'm going to tell you guys what a range is really fast, because in order to understand premium versus discount zones, you have to be able to understand what a range is. All right, so a range is essentially a swing low. Okay, now if you don't know what a swing low is, I'll try my best to explain it, but maybe watch another video on that. A swing high or low is a 3-candle pattern, right? So it's essentially where one wick, right, the bodies and the wick of the candle that's to the left and the right of a candle, it has to be higher, right? So for example, this swing low right here has a candle to the left and to the right of it, and both of those are higher than this swing low, right? So that's one swing low. And then you find a swing high, that's the same way, right? So I'm going to use this swing high candle right here. Notice how the bodies of the candle and the wick as well, to the left and the right of it, is lower, right? So now that we have identified our first range, because you have to have at least a swing low and a swing high to even have a range in the first place, we are going to drag our Fibonacci tool, okay? And for those of you who do not know who the Fibonacci tool is, maybe watch a video on that. If y'all leave a comment below, I can make a video breaking down the Fibonacci tool if that's what y'all want me to do, right? But we place our Fibonacci tool from the swing low to the swing high. Now, when you're using the Fibonacci tool, it's important to remember that you're always going from left to right, right? So imagine that before this pullback happened, right? Before this little range happened right here, act like this price doesn't even exist. Notice how the 50% level, all right, because that's the level that we're looking for. So this yellow line on my Fibonacci tool is my 50% level, meaning that that's simply just the 50% level of this entire range right here. The only thing that the Fibonacci does is measure out a range. It's nothing fancy. It's nothing for you to be too excited or feel scared to use, all right? So notice how when the price came into this discount zone, the market bought back up, right? So essentially in the range, right, from the low to the high, if you're looking for a buy, you're going to be looking for it to come back down into discount. So everything that is under the 50% level is a discount zone. Any price down here is a discount zone, okay? So what you do as a buyer, and you're using your Fibonacci tool, you're looking for anything that's in the discount, whether it's an order block, it could be a fair value gap, it could be anything that you're typically used to seeing yourself, and then you're looking for that to take the trade. And the same if you're a seller, right? If you're a seller, you want to sell when the market is in a premium zone, okay? So I just wanted to show y'all this range right here. Now we're going to do another example. Okay, I'm going to drop down. That was the 2-day chart. I wanted to go to the highest time frame that I can go to without confusing everybody. Now I'm going to go to a 2-hour chart. Okay, 2-hour chart. Let's see what's on this 2-hour chart, right? So here's when using the Fibonacci tool starts to become a little bit tricky, because now you see all of these different ranges. And you might ask yourself, well, the tracking trader, which one do I use? Do I use this little range right here? I see a swing low. I see a swing high. Do I use this range? Well, you could have used this range if that was your only swing low, only swing high. So me personally, what I like to do, until the market breaks this swing low or this swing low right here, right? The market have come really close to this one. So what I would do is I would use this swing low right here to find my entire zone. So this swing low to this swing high, right? This gives you the entire zone right here on a 2-hour chart. And the reason why that is important is because it took me so many years as a beginner trader, because I would do things like this. I would see this swing low right here, and I would say, okay, this is swing low, and this is swing high. Notice how the market doesn't respect that 50% level, right? When the market comes down to it, it just goes all the way through it, and it treats you as liquidity. And this is why so many people hate using the Fibonacci tool, because, you know, they don't really understand where to put where to put the swing low and the swing high is at. Imagine if you use this low right here, the same thing would have happened. The market would have came down, and it's not crispy. It's not, you're not seeing the market have any reactions towards that 50% zone. So that's one way to learn if you're using the wrong swing low or not, right? You always want to see the market have some type of reaction near that 50% zone. An example of that is right here, you guys. When we use this swing low, notice how when the market came up under that 50% level, it didn't stay for long, right? It wicked out of there. It wicked out. So every time it comes down, it wicks out, right? And this is the Nasdaq chart, by the way. So this is actually a chart that I'm looking at. So if I'm looking to be a buyer, right, I do not want to be looking at these ranges right here. Now I used to do this as a beginner trader, and I used to lose so much because I would look at this new zone, and I would say, wow, look at how it's every time it goes below the 50%, it's bouncing. And that's how the market typically get newer traders into a lot of trouble, because you will look at that new zone right here and not really realizing that this whole area right here, let me show you guys, this whole area right here, this is all liquidity. All of these lows in here, this is all liquidity. So the market is going to want to come back down and take this liquidity, you guys. So if you're using the Fibonacci, the Fibonacci tool the wrong way, it can really be detrimental to your trade. So my advice is this: always use a bigger zone. Don't feel like the market cannot go back down to that zone. Don't feel like your zone is too big. Obviously, you don't want to be on a weekly chart trying to use the Fibonacci tool, because it's probably going to take, weeks at a time for the market to go below that 50% zone, right? You have to also use this based on the type of trader you are. So me, I like to use at least the 4-hour or the 1-day chart when I'm using my Fibonacci tool. 4-hour, 1 hour, or 1-day chart. I do use it on the lower time frames as well, but I'm talking about when I really want the market to give me a nice move, right? So this is the range that I'm looking for right now on Nasdaq. And I'm actually looking to take it up for a buy or a sell, depending on what happens first. So let me give you guys a quick technical analysis on the Nasdaq right now. We're just going to do a quick top-down analysis on the Nas. Right, so if I'm looking at the weekly on the Nasdaq, we're going to leave the Fibonacci on our chart. We're going to leave the Fibonacci. And if y'all have any advice for working this trading view, please leave a comment for me, because trading view is so hard for me to work. Okay, so the first thing I'm going to do right here is I'm going to mark out this rejection block. All right, I'm going to put this zone. This wick right here is what is known as a rejection block. If you don't know what that is, just search it into YouTube. I'm pretty sure somebody made a video on that rejection block. So what I'm looking for right now is, notice how the market has already come into this rejection block once, but it did not hit the midpoint. So what I'm looking for right now is for the market to eventually, at the bare minimum, hit the midpoint. Notice how there is liquidity right here on top of this candle. And there's also liquidity over here as well. The market doesn't have to just hit the midpoint. It could come all the way up here and take everything, take all of that liquidity. But I'm at least looking for the midpoint, right? So I'm going to leave that on my chart as we drop down into that 2-hour time frame that we was looking at the first time, all right? Now notice how it looks a little bit different when you drop down into the time frames, right? And this is why I was saying that, you know, yes, I want to be a buyer or a seller, right? But I'm only willing to sell up here in a very premium zone. And I'm only looking to buy down here in a very discounted zone. So that is the main reason why I did not find a trade yesterday. Because if you look at yesterday's price action, it kind of just stayed in an area where I wasn't really comfortable buying it. You know, I seen one trade that I could have taken, but it wasn't an A+ trade. So I just didn't trade yesterday at all, right? Expanding on the idea of how to use wicks, right? I made 2 videos on how to use the long wicks to not only find entries, but to find a bias. Look at how when I measure this wick out on the 2-hour time frame, the 50%, the midpoint of this wick right here, price did hit that yesterday, and then it had a little bit of a bounce, right? So I wouldn't trust that. I seen this yesterday in real time, and I just wanted to see what was going to happen. But what I'm looking for on the 2-hour or the 1-hour chart, I would like to see a candle close below this wick and starts to make its way lower, taking all of this liquidity that's in here, going back into a premium zone before it shoots up to the midpoint of this rejection block. Now, the way that I trade is this, you guys. One of the 2 things have to happen first before I'm either a seller or a buyer. Okay, now if I'm looking to buy, I want to see it take this liquidity first. And I'm going to look for it to draw back up into this buy side liquidity up here. Okay, if I'm looking for a sell first, I want to see it go right up here first without taking this liquidity. And then I'll look to sell the market back down into this premium zone, depending, you know, after I obviously see like a market structure shift or something on those levels, you guys. So I hope this video was informative. I try to keep them short, you guys. Let me know in the comments below if y'all want me to make longer videos, if y'all want me to give y'all more examples when I'm trying to teach something. Just leave a comment. I need you guys to start communicating with me because I really do want to become a better teacher. And I know that when you're teaching someone new, you know, some of you guys may already have experience with trading, but a lot of people probably don't. So I want to keep that in mind. And when you're teaching somebody new, you have to really try to break down everything. So if you're a brand new trader, maybe watch this video back a couple times. Leave a comment down below. I'm always willing to help anybody who wants to learn how to you know, trade so that they can gain financial freedom. So if you made it this far, I appreciate you. Don't forget to like the video, subscribe to the channel, and comment down below if you have any questions. And I appreciate everybody for watching. Until the next time, and I hope everybody have a great trading week.